Hi traders, are you tired of guessing where the market is going next? Do you want a strategy that actually helps you understand price movements instead of just reacting to them? Well, in this video, I'm going to be showing you exactly how to trade Forex using the supply and demand strategy. Now, this is one of the most powerful trading concepts used by professional traders to identify high probability trade setups. So stay locked in because this one's going to be a game changer, all right? Before we jump in, make sure to hit that like button to support the channel. And if you are new here, subscribe for more valuable Forex content. Okay, now let's just get into it. All right, first things first, what exactly is supply and demand in Forex trading? What does it even mean? Right now, the concept is simple. Okay, supply zones are areas where there is a high level of selling pressure. It's as easy as that, right? Where there's high level of selling pressure. Now, when the price reaches these zones, we often see a drop because sellers overpower buyers. So those are areas we call supply zones. Okay, for example, we can see what's happened around here. Areas where sellers overpower buyers, and we most likely see a drop when price gets to that zone. On the flip side, demand zones are areas where buyers step in aggressively, pushing the price higher. Now, these zones are critical for traders because they show us where the big players, banks and institutions are making their moves, right? By identifying these zones correctly, we can predict potential reversals and strong market moves before they happen. Okay? And that's exactly what we are going to be diving into next. Now that you know the basics, let's talk about how to actually identify supply and demand zones on a Forex chart. Here's what you need to look for. The first is strong moves away. So look for price areas where the market made a sharp movement up or down, all right, with big momentum. This signals a supply or demand imbalance. Secondly, look for a base formation. Look for a base formation. Before these sharp moves, you'll often see price consolidating, forming a small range or base. This is where big players are placing orders before price takes off. Then watch out for retests, right? Once price returns into a previously established zone, it often reacts with another move in the same direction. These retests give us entry opportunities. Okay, now that you've identified these zones, you can use a rectangle tool like I did to highlight areas where price had a strong reaction in the past. Now this will be a supply or demand zone. Then you wait for price to return. Okay, patience is key. Let price come back to the zone instead of chasing the market. Confirm with price action. It is necessary. Look for candlestick patterns like engulfing candles, pin bars, or rejection wicks when price enters the zone. Okay, these give extra confirmation. All right, it is very important. Then finally, you have to set your entry, your stop loss, and your take profits. Now let's just zoom out a bit. You can see that this particular zone, okay, I'm just going to extend it. Just going to extend it. You can see that the next time that price came within this zone, this territory, can you see that it got rejected again and went up? When price came again into this supplies, into this demand zone, you can see that we had a rejection. So as price entered into this zone, you should be looking out for bullish patterns. And when you get your confirmation, you enter your buy trade. You set your stop loss accordingly, just outside the zone. Okay, to minimize risk. Then you target a take profit level based on previous structure or risk to reward ratio. You can use resistance zones for your take profit if it's a buy trade. You can use support zones if it's a sell trade. All right, or you can just use a good risk to reward ratio. Now, this strategy works because it aligns with how institutional traders operate. The buy at demand zones and sell at supply zones. So we are essentially trading with the smart money instead of against it. All right. Ensure that you always apply proper risk management. Now, in as much as you might have a very good strategy, a solid strategy that works, if you do not observe good risk management, you might not be successful in the long run. So that is the reason why risk management is paramount, irrespective of the strategy that you are using. Okay. For example, risk management demands that you employ stop losses, right? Stop losses and take profits. Okay. And risk management also demands that you use appropriate lot sizing. Do not over leverage. Okay. Do not be using lot size 0.1 on $100 account. Do not be using lot size 1 or on a $1,000 account, right? Always use proper lot sizing. Use smaller lot sizes to give the market some space to breathe, all right, in case of fluctuation. So do not try to just use the biggest lot size that your margin can carry. Okay, that is too much risk. All right, and ensure that you always use good risk to reward ratios. For example, if you are entering a buy trade, your stop loss should be, of course, below your demand zone, and then your take profit target should be at least times 2 of your stop loss position. So for example, if you are risking, let's say you are risking about 250 pips, your potential profit target should be at least 500 pips. That is a risk to reward ratio of 1:2. Okay, so in that case, even if you have equal number of wins and losses, you're still going to be on the winning side. Imagine you win 2 trades and you lose 2 trades because you are using a risk to reward ratio of 1:2. Those 2 trades that you won, let's say it was $10 each that you made, and then the times that you lost $5 each, right? So that's going to be a loss of $10 and a win of $20. So at the end of the day, you are still in a net profit. So that is it, traders. There you have it. That's how you trade Forex using the supply and demand strategy. This method is simple yet incredibly effective when applied correctly. If you found this video helpful, make sure to smash that like button and subscribe for more Forex trading insights. Also, drop a comment below if you have any questions or if you want me to cover another strategy in the next video. In the meantime, thank you for watching and I hope to see you in the next video. Happy trading.